Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. We have an unusual week that we are preparing for, and we kicked off some of that discussion yesterday with a top tier outlook. So at your convenience, go ahead and check out our show that we do every Sunday evening at 6 p.m. Eastern. And part of what we talked about was one, we are still looking at an overall uptrend. Two, we are still anticipating two, if not three rate cuts by the December. Well, I shouldn't say by. So we're either looking at a September, November, December quarter point cut path or a November, December meeting quarter point cut path. So 2 to 3/4 points means we're half to 3/4 points lower as we end the year. So that's going to keep things still pretty bullish. Remember, gang, rate cuts are never bearish. The underlying issues, there could be all sorts of issues. The issues surrounding why the Federal Reserve may cut rates could have, something instigating that was negative, a response to something affecting the economy where rates need to be lower, money needs to be printed, just general accommodation. But the output, right, is just overall movement higher, as we have seen all year, save April, where we adjusted from 3 to 4 rate cuts to maybe 1 to 2, right? So that's where, if you're wondering, Rog, what could instigate a pullback and chop like we saw in that transition from Q1 to Q2, it would be another abrupt adjustment. And remember, in April, it wasn't just a message of we're going to cut less. It was a message from people not named Jerome Powell that were saying, oh, we need to hike rates, which was absolutely bonkers and absolutely just dismissed by Powell during the different rate statement press conferences. So when we have an overall move to the upside, now, if you're looking at this gap here that we have on Monday, remember that this Friday, and again, the week is unusual because we're going to trade today, tomorrow, Wednesday, we have a bank holiday, and then Thursday, Friday. So the bulk of the OPEX action is likely going to be pushed off to Thursday, Friday. So that means the next 2 days, we're going to be dealing with contract rollover, at least on our charts. So what you can see there on the toss chart, you see how it's, I know it's kind of hard to see, but it says ESU24. So we're leaving the M, or the June contract, behind. And what's happening is charting platforms are going into the expiration of the contract on Friday by today, Monday, reflecting what's happening in the September contract. So keep that in mind, because when you're looking at, say, ESM24, you can see it's trading at 54.30, and then you look at ESU24, that's trading at 53.96. And then you just look at the continuous contract. Boom. Now you know, oh, when I pull up the continuous contract to take a look at my hourly price movement ranges, this is now September. So we are trading September. So when we're keying in our trades on, say, the futures contracts, it's no longer going to be the June contract. The M contract is going to be the U contract. So that's the first thing we'll deal with here on Monday morning. And this is just a gap, the difference between where the M, the June, is, and it's still trading, and where the September is trading, but the volume is moving on to September. Now, the common question is, well, what about a gap close, Rog? Now, a gap close would mean about a 60-point sell-off. Do we have to see that? We really don't. All gaps do not have to close, right? And they certainly don't have to close immediately. But there is then that shift between where M left off on Friday and where U is being reflected on our charts today. And we have a hole in the chart, not because we gapped up today, but because where M was at was a lower price in September, which then also makes us think, gosh, September expectations for where the S&P will be when we have that quarterly expiration, the third week of September. Oh gosh, that's even more bullish than June. We're not gapping down, are we? We're gapping up. The value of September S&P futures is higher than the value of June S&P futures. So it just continues the overall bullishness that we've been seeing since we got out of the chop of April. And really, when we step back, the overall move to the upside that we have seen all year long. There's the year, gang. Nothing bearish about it overall. Yes, we had some challenges through April that I mentioned, but you take April out of it. You take the noise that was triggered by really only maybe 3 or 4 FOMC members, the hawkish ones, right? You back that out, and we have been climbing all year long, right? Okay, so with that being said, the other thing that I'd like to see, it's not just about stonks, is it? It's not just about the indices. What else do we want to see continue to move higher in addition to the indices, if indeed the Federal Reserve is going to cut rates, or at least that we collectively, investors and traders, are preparing for it? Bond yields should continue to at least be bullish, if not eventually back into an uptrend. We haven't seen an uptrend in bonds all year. Now, it's not as if we're in a downtrend any longer either. This could definitely be considered bullish chop. And what we really want to see is this bullish chop, which has a little bit of bullish momentum, organized into an uptrend. We're not there yet, but it's hard to call bonds bearish. They're just very choppy. And for now, they're a little bullish. But we really want to see bonds continue to move higher. The other thing that would be nice is to see the dollar move lower, and that would mean the euro's moving higher. So we're not seeing a lot of that. But remember, there are 2 central banks at work here. We've got the ECB and their own monetary policy. We've got the US dollar. There's no way to look at the dollar. There's actually no such thing as what is the dollar doing. I'd say wrong. That's kind of unusual because we talk in that jargon, right? But it's always the dollar against something else. In the case of 6E, it's dollar versus euro. In the case of the dollar index, it's an index, right? What's the index made up of? It's made up of other currencies trading against the dollar, namely euro and pound and yen. Those are the top 3. So there's no such thing as a pure look at the dollar. We're always going to have to factor in the sentiment, the messaging of other central banks. All right, but nonetheless, we really need to see the euro ideally move higher, which would reflect a weaker dollar. Now, why a weaker dollar? Because the central bank of any country, when they're embarking on rate cuts, when there are anticipation of rate cuts, that currency really should ideally be weak as well. And we're not quite seeing that on the euro here. All right, so as always, gang, let's jump into the questions. Good morning. Good morning. All right. What are my thoughts on SMCI long? So SMCI is a small cap Russell weighted name. I know a lot of folks kind of put this in the semiconductor bucket, but it's really not. I mean, yes, it's a semiconductor stock, but it's got no weighting. I don't even think insignificantly. I don't think there's any weighting in the ETF for semiconductors, the SMH. I don't think there's any weighting for SMC either. So this is very much a small cap Russell conversation. That being said, I sure wouldn't be bearish. I just don't know that of all the things that I could be buying related to semiconductors, that SMCI would be one of them. Not to mention, this is a spendy stock. Let's think about scalability. Let's think about if I have a smaller account or a medium-sized account. Is an option SMCI necessarily the most scalable thing? Can I get into a liquid option at a reasonable price where I could buy multiples of that call? And I would be focused on the call side. So this is where the trading part of what we trade is more important than how we trade it would sort of kick in. So please do look at some of the SMH names that are in uptrends. There are a number of them. That being said, though, the area between about 800 to 690 would likely be pretty darn good support. You've got a middle area there around 742. But remember, we've got 1,980 waiting above. So the problem is this isn't an uptrend where the expectation of higher highs is necessarily what it was in Q1. Small caps love lower rates. I mean, everything loves lower rates. And you can see along with the rest of the market, SMCI had a great run in Q1, and then ever since Q2 began, and arguably into the end of Q1, things have been very choppy. So while it was a great trading name, this is where we have to oftentimes adjust and say, is it the same quality caliber trend that it was before? So Ben, I'd have to say it's not. It's buyable. I think there's a lot of other better things to be looking at that could have better upside follow through. But those are the zones that I keep an eye on for the long position. And it would be a long. I'm with you there. All right. Next up, what are my thoughts on TCM? TMUS or MU. Let's take a look at TMUS. So TMUS is heavily weighted in the XLC. That's the communications sector. It's one of the newer sector ETFs, and it's a quirky one because this is when the overall market for tech got split up and things got taken out of tech and put into this communications sector. But it also has a lot of weighting from the IYZ, which is the telecommunications sector. And TMUS has obviously been something that's absolutely been in fuego, and it still would be a buy the dip. And overall, between telecommunications, I think T and TMUS would be about as good as that little segment of that larger sector of communications does look. So I do like that, but keep an eye on XLC and keep an eye on IYZ as well. But yeah, TMUS is most definitely, we can consider that to be one of the leaders, right? Absolutely. All right, Randy Days asks, last night I talked a little bit about XLI. Can I ask what your thoughts are on Deere on a 1 hour time frame? I'm looking to the long side. So when I look at Deere, well, when we look at XLI in general, there are actually two stocks that are fairly bullish, Uber and Honeywell. Then we go down to the next sort of tier, if you will, of things that are more neutral. And Uber kind of has a foot in both camps, but it's got bullish momentum right now. That next tier would be RTX and your question on Deere. So Deere is not one of the relative outperformers near the top of the list. I kind of call it a mid-tier. In other words, it's not an uptrend like Honeywell. It doesn't have bullish momentum like Uber, but it's not bearish like UPS. It's not bearish like UNP. So that said, on a 1 hour time frame, what would I do with Deere? Well, it does have an uptrend on the 1 hour. So this would not be, to your point, Randy Days, this would not be a daily time frame setup. And it's a buy the dip. It's a buy the dip. You've got a trend, and I would look for pullbacks closer to about 376, 375. All right. Okay, next up, is Amazon a good buy the dip on an hour chart at the 200? All right, Smoke. Consumer discretionary has been the laggard, has been the problem child of the NASDAQ. So when we think about the four main sectors in the NAS, SMH, XLK, XLC, and then XLY, the first question is, do we have to do anything within the XLY? Of all the things we could do with finite resources we call our trading capital, is a consumer discretionary name, namely Amazon, something that's worth our time and money? I'd have to say largely no, right? So if I'm going to do anything with Amazon, I would not call it buy the dip, because for me, when I use a buy the dip strategy, ideally, it's got a trend. So the dip is really just jargon for a retracement of an overall uptrend. Now, is there support to be bought? I can't do it on the 1 hour because my rules dictate two things. One, on a 1 hour or a daily time frame, I will not buy red candles. I will not get long calls when that chart is printing red candles. The other thing is the trend that preceded the current weakness was down. So there's a little bit more bearishness to the 1 hour. The daily is a little bit more neutral. So we might have an opportunity there, but I'm going to pass on Amazon. I think that overall, when I look at what's happening in Amazon, and really the only trends in consumer discretionary are further down the waiting list with Starbucks and TJ Maxx. Those are the two trends within consumer discretionary. So if we start at the top of the food chain with the NASDAQ, we think about what the strongest names are within it. XLY, consumer discretionary, is just not going to show up. And Amazon's the number one weighted there. So I'd have to say, when we're looking for opportunities and we're prioritizing them, right? When we're sorting through them, which would be the best for potential follow through, Amazon's not on the list. It's just really far down. As are most consumer discretionary names. So Smoke, thank you for the question. No on the 1 hour, perhaps on the daily. All right, next up is Jolie is asking about Google. So Google too is moving sideways. But you notice that there's less red in Google. And I really do rely on the color coding, because the color coding builds into it a really easy way, like a traffic light, to say participation's bearish and the momentum and trend could be as well, versus participation being neutral or even bullish. So the 1 hour is bullish to neutral, and the daily is mostly bullish. It's in chop, but it's bullish chop, right? So if I'm going to do something in the XLC, which, by the way, XLC is where Google hangs out with TMUS and with Meta, which is the number one weighted stock in that sector. So the best looks within, so let's do the same thing. Is Google worth our while? Potentially. Is it bullish on the daily? But of all the things that I could do in that communication sector, aside from the aforementioned TMUS and T, actually in T is not the best trend in there. It's wobbling a little bit, but it's still bullish. Meta, TMUS, EA, and Netflix are actually the strongest names right now in the communication sector. Now, if that communication sector is akin to a rising tide, an individual boat like Google could benefit, no doubt, could benefit. So it's definitely not off the list. It's just, again, when we're watch list building, and think of it this way, gang, and I've observed this in myself and I've observed this in other traders for many decades. Watch list building really should be 80% of what we do. 80% should be, what stocks do we like for the best follow through, focusing on trends. Could be downside trends too, right? And then how do I set up those? And then the next tier down would be non-trending stocks. Now, non-trending stocks like Google could benefit if those 4 trending names were to be a rising tide and it just takes everything with it. But I'd rather be in sort of the strongest boats, if you will, within that tide. So that's where I'd say XLC is bullish. Google's certainly bullish, but it's bullish chop. And let me make sure I'm exhausting opportunities in EA, Meta, Netflix, TMUS before I get to something like Google. But it would definitely be something to look at to the long side. And for me, the long side really alone. All right, next up is, moving on. Can we take a look at Lulu? Is it a good buy? We've been looking at, I've gotten a question about Lulu for a long time, and clearly they're known for yoga pants that make your butt look good. And clearly the butt improvement technology is lacking. I don't know what's going to happen. Maybe some AI in the yoga pant. I'm only slightly kidding. But no, I would leave Lulu alone right now. I would not consider it on the 1 hour or daily, or even frankly, the weekly. If we're looking really long term, I'd leave this thing alone. Clearly something's going on underneath the hood. It's not good. And so I would leave this be until we start to see some stability. And more specifically, just the red candles have got to stop. If you're ever curious, Rog, when would you consider something like Lulu? The red candles have to stop, right? We've got to see some neutral clarity. We've got to segue out of the overall weakness. And then rather than trying to, as they say, catch a falling knife, we can wait to see if there's an oversold opportunity. Oversold is not something I'll look for with red candles, but if they can go yellow and stay yellow, at that point, we could start to see, all right, maybe Lulu's basing, and maybe there's some accumulation. I'd love to see some volume during that accumulation. And in terms of the price level, maybe it's 300, maybe it's 320, maybe it's 295, whatever it may ultimately be. But I'd like to see that I'm not alone in this idea that Lulu is basing. So price-based volume in a neutral environment would be ideal. All right, gang. And just like that, that's a wrap. Thanks as always for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. All right, gang. Be good to each other.